15 retailers in America closing down. Attention shoppers, brace yourselves for some unsettling news. The retail apocalypse has hit America hard, with 15 popular stores shutting down. Empty storefronts and abandoned shopping carts now fill what were once bustling centers of commerce. What's lurking in the shadows of these once vibrant stores now? Only time will tell. Beware of the changing retail landscape and stay safe out there. Well folks, it looks like we're in for a bumpy ride in the world of retail. The big names are dropping like flies, and we've got the inside scoop on who's closing up shop. First on the chopping block is none other than the houseware giant Bed Bath & Beyond. This once mighty retailer used to have more than 1,500 stores across America, but now it's aiming to end the year with just 480. That's quite a purge if you ask me. The company has been through a rough patch lately with massive losses, the tragic death of its CEO, and an activist investor selling off a massive stake in the company. Ouch. At least 416 of its US stores are getting the boot, and all 65 stores in Canada are also set to be shut down. By the end of 2023, there will only be 360 flagship Bed Bath & Beyond stores in America, alongside 120 Bye Bye Baby locations. That's quite the downsizing if you ask me, and it's hitting some states particularly hard. California is losing 35 stores, Florida is losing 21, New York is losing 23, and Illinois is losing 18. Yikes. But Bed Bath & Beyond isn't the only one feeling the pain. Tuesday Morning is also closing up shop in more than half of its locations as it struggles to survive bankruptcy. That's 265 stores, folks. That's a lot of stores. The chain filed for Chapter 11 bankruptcy this month, which means it has to close its least profitable stores. Unfortunately, a lot of these are in California, 30 stores, Florida, 23 stores, and Texas, 19 stores. Virginia, Georgia, and Colorado are also taking a hit. And let's not forget about Gap and Banana Republic. They're closing up to 74 stores in 2023, after already shutting down 276 stores since announcing their plan to close roughly 350 stores by the end of the year. We don't know exactly where these closures will happen, but if California's previous losses are any indication, they'll be hit pretty hard. Party City is another big brand facing bankruptcy, with 10 stores already closed throughout February and 12 more locations up for auction across the nation. New York will lose the most Party City locations with 5, followed closely by Michigan with 4. Even Walmart, the iconic retailer we all know and love, is feeling the pinch. The company is closing 5 big box stores and its last 2 remaining pickup-only locations due to poor revenue. The states to be hit this year include Illinois, Wisconsin, New Mexico, Florida, and Arkansas. Macy's is closing 4 stores in the first quarter of 2023 as part of its 3-year plan to choose 125 locations, with malls in California, Colorado, Hawaii, and Maryland closing out. The well-known online Amazon is feeling the squeeze. The online retail giant has announced the closure of several of its fresh grocery and go convenience stores, and it's pausing its planned expansion while it reevaluates its in-store strategy. It seems like the US's biggest brands are all struggling to cope with a dip in the economy, leaving many of us wondering what's next for the future of shopping. Still on this great American store shuffle, Bath & Body Works is giving us some sweet smells and some sour news with its announcement that it'll be expanding its footprint with 90 new stores and 25 remodels. But sadly, that means about 50 of their mall-based stores will have to close up shop. And let's be real, we all know that when you're at the mall and you get a whiff of warm vanilla sugar, it's game over. So this is a major loss for those of us who need our Bath & Body Works fix while we're out shopping. But Bath & Body Works isn't the only one downsizing. Best Buy, the electronics giant, is closing 20 to 30 of its large format stores this year. Now, before you go into a panic thinking you'll have to drive 50 miles to get to the nearest Best Buy, they're opening 8 smaller concepts and 10 outlet locations. So they're still making moves, just in a different direction. Big Lots, the discount chain, is also closing 7 stores in California and Colorado. But they're not just shutting them down for no reason. Some of the closures are because they plan to sell the store sites, while others are underperforming. Big Lots is also shifting its focus to more rural small town stores where it can make more profits. Plus, let's face it, sometimes the best deals are found in the middle of nowhere. And if you're in California, Colorado, or just passing through, you might want to take note of the stores that are closing down. In California, it's Citrus Heights, Dublin, and Ridgecrest. In Colorado, it's Arvada, Denver, Englewood, and Fort Collins. So if you need to stock up on some discounted goods, you might want to hit up these locations before they're gone for good. The next in line is Real Real. Just have it in mind, folks, that Real is in its downsizing stage. This upscale consignment store has been the go-to for fashionistas looking for high-end labels at affordable prices, but it looks like they're cutting back, with plans to shutter 2 offices and 4 retail outlets across the country. Why the sudden change of heart? According to insiders, it's all about the bottom line. The company hopes to save a whopping $2 million with these closures. That's a lot of Chanel bags. And it's not just the Real who's feeling the pinch. JCPenney, another department store staple, is also downsizing. They've been closing stores left and right for the past 3 years, and now they're setting their sights on 2 more locations in New York and Indiana. But this move raises a serious question. Where are we going to get our vitamins and over-the-counter meds? With fewer options for brick-and-mortar stores, it might be time to stock up on some essentials. Better safe than sorry, right? Well. Grab your popcorn, because we have some breaking news in the world of pharmacies. CVS is set to close at least 1 store every week of March, and Walgreens is joining in on the fun by shutting down 2 stores in Orlando, Florida. Now, I know what you're thinking. Why are they closing these stores? Don't they want to make money? Well, according to Fox 4, CVS considers many factors when making these decisions, such as local market dynamics, population shifts, and ensuring there are other access points for the community. In other words, they're trying to keep their customers happy. But sometimes, tough choices need to be made. So who's on the chopping block? Let's take a look at the CVS stores set to close in March 2023. First on our list is the CVS store located at 215 Euclid Avenue in Des Moines, Iowa, which closed its doors on March 1st. Sayonara, Des Moines. Next up, we have Houston, Missouri, which is scheduled to close on March 7th. Houston, we have a problem. Your CVS store is about to be history. And then there's Tallahassee, Florida, which will be saying its final goodbyes on March 16th. So long, Sunshine State. Last but not least, we have College Point, Queens, New York, which is set to close on April 5th or earlier if needed. Now, don't panic if you live near one of these stores. CVS will still maintain access to pharmacy services, and there are other geographic access points to meet your needs. Plus, if you need your daily fix of candy and soda, there are plenty of other CVS stores out there. We will round this list with some news from the beauty world. A major bombshell has just hit the beauty world. It turns out that Former Brands, the parent company of beloved beauty brands like Morphe, Lipstick Queen, and Bad Habits, filed for Chapter 11 bankruptcy at the start of this year. Yes, you heard that right. The same company that helped us all achieve the perfect winged liner and luscious pout is now in financial trouble. Let's take a trip down memory lane, shall we? Former Brands was originally launched as Morphe in 2008 and quickly became a hit among beauty enthusiasts. Their affordable pricing and vast product variety helped them rise to fame, and they even partnered with social media stars like James Charles and Jeffree Star to bolster their social media presence. But as we all know, fame comes with a price. And some of Morphe's influencers got caught up in personal scandals that left the company reeling. In a desperate attempt to distance themselves from the drama, Morphe rebranded as Former Brands in 2020. Unfortunately, the company struggled to find its footing in the aftermath of the scandal. Revenue projections fell short, and their brick-and-mortar stores were forced to close. It was a rough time for the beauty behemoth, but they soldiered on. As it turns out, Former Brands was in even deeper trouble than anyone realized. The company entered into an acquisition deal that would see lenders take over its wholesale operations, online platforms, and international Morphe stores. So friends, the retail landscape is changing, and it's changing fast. We're saying goodbye to some old friends, but hopefully, we'll be saying hello to some new ones soon. Keep your eyes open, your wallets ready, so that the retail apocalypse doesn't claim any more casualties than it already has.